My name is Greg Bell. I'm with the HBAR Foundation. I have the pleasure to be chatting here today with Thomas. The HBAR Foundation is the venture arm of Hedera. Thank you. And Hedera is a highly used, highly scalable, public permissioned protocol. It is governed and operated by some of the world's largest institutions, from Google, IBM, Nomura, Shinhan Bank, Dell, LG, Hitachi, Mondelez, BitGo, and many, many more. So if you wouldn't mind, Thomas, would you give a little introduction of yourself and your organization?
Sure. Good morning, and so glad to be here, and thanks for inviting me, Greg. My name is Tom Sullivan. I lead business development for digital assets at Société Générale here in New York. So most people will say SocGen. SocGen is a 160-year-old French bank. We have been involved, of course, in the financial markets for that long. But SocGen also has a digital asset arm called SG Forge. SG Forge was formed about 5 years ago with the basic idea that capital markets can and should function better using blockchain technology. And over the course of that time, SG Forge has been participated in issuing a number of financial instruments natively on blockchain, notably some notes and bonds, and then most recently in 2023, SG Forge issued its own stablecoin on Ethereum. So I'm here primarily to support SG Forge, but also to kind of build the digital asset ecosystem broadly. So I'm really looking forward to this discussion, Greg. Thanks.
Excellent. And we did get bumped a little bit earlier, so we're hoping that our third panelist will be joining us momentarily, Kurt from PwC. One of the goals of the HBAR Foundation is, of course, to partner with all of you, to the firms and individuals that are really growing and accelerating the adoption of blockchain technology. And an observation that I made over the last year, and in fact at this conference a year ago, was the desire for the industry to really focus on practical, real-world applications of this technology. So that's really what we're going to be focusing on beyond the buzzwords. Now, Hedera has over 72 billion transactions since inception. That is more transactions than any other public protocol and more than the top next 5 combined. So those are Solana, Stellar, Ripple, Polygon, and Tron. And industries and individuals really are building on Hedera for a variety of different industry use cases. This ranges from automotives to cosmetics to food and bev, apparel, pharmaceuticals, etc. So we're going to jump into a few of these in a moment, but I think it's really important to understand why. Like, why are institutions choosing to build on blockchains? What solutions are they looking for? What problems are they seeking to solve? So I'd like to contextualize what 72 billion transactions looks like for a moment. So if you wouldn't mind, take a look to your right at the person next to you. Take a person. Look to your left. It's likely that over 50% of you are using Hedera, and you may not even know it. In fact, you may be using it right now in this very room. You may be wearing apparel that has been recorded on Hedera. And, take my shoes as an example. We're part of the global distributed supply chain. And supply chain happens to be the largest application of blockchain technology from an institutional basis in terms of transaction count, and similarly that on Hedera. And so these shoes were recorded from the manufacturing through to the distribution, to the retail, to the sale. If I were to return them, they'd go back into that supply chain. And it's a collection of RFID chips, of codes, of scanners, of barcodes, etc., that are generating these transactions. So we're really focused not just on the next billion users, but the next trillion devices that will be driving transactions on the network. So I'd like to kick it over to you, Thomas. What use cases are you really excited about from this technology?
So maybe before I answer that question, and I told you that I might do this, I'm going to pivot a little bit. And I mean, firstly, to say, congratulations. I think that's, when you talk about those numbers, and I just want to reflect on that for a second, because, for any of you who were in the room when Mike Novogratz was speaking a little while ago, what he was talking about was, his sort of non-conventional thought process was that the next 5 years, this is plumbing. And the reality is that those of us who have been in the space, on the technology side and, on the application side have been talking about that for a long time. And I think this is a clear indication of that you have all these transactions that occur and nobody even realizes that they're happening on blockchain. And that's, when that's happening all the time is kind of when we'll, be at that moment. So along those lines, and we have actually, we use a similar application. Obviously, it's not on Hedera, but we have an application that we've been using for more than 2 years that helps to tokenize U.S. Treasuries and move them between our affiliates. And the reason why we're doing that, and actually my friend Prakash is in the room, he helped build the platform, his company Broadridge, and the reason why we're doing that is because it saves us money. Rather than using a bank to intermediate with, some of the transactions, we're able to move transactions seamlessly, in real time between our entities. And that's, that's really what it comes down to. We have a way to save money. So that's kind of, one of the key pillars of what we're doing and how we look at it, how we can build efficiency and, cut out some, layers that are a part of processing transactions or processing, products and things like that. But the other thing is the opportunities that are created by using the technology. So the one example that I have is last year, SG Forge and SocGen were part of an issuance that was a green bond. So SG issued its own debt that was tied to its performance related to its green initiatives, and that type of thing, while even that issuance is somewhat nascent in the features that it can do, but when you think about building in smart contracts, performances that the security itself can change, the attributes can change based on these performances that may happen off-chain or on a different chain. Or, that's really the next level of financial instrument that we're really not even seeing. So that was the first of what should be more to come. So I think that's really the direction of travel.
I'm so glad you brought up your green bond initiative because, when you look at supply chain as the largest application of the technology, it gets to the why, right? Why are businesses choosing to utilize a blockchain infrastructure for recording this type of information? And yes, it does give real-time inventory data across their various distributed pipelines, but increasingly, it's also providing emissions-related data. So providing a per unit account of auditable information as it relates to the carbon footprint or a specific emission from an institution. And this is a paradigm shift, and it's also being driven, of course, by regulation that is requiring the disclosure of emissions-related information across the globe. And, one of the recent announcements on Hedera in the automotive space is that Hyundai, the largest auto manufacturer in South Korea, and Kia are utilizing Hedera for the tracking of their automotive supply chain. And that relates specifically to addressing some of these huge risks that relate to emissions. It wasn't that long ago that we had that huge scandal with Volkswagen where they had to pay billions of dollars in fines as it related to the promise of net zero claims, promise of their emissions related in their manufacturing pipeline. So, Thomas, what industries do you feel and are you most excited about for utilizing blockchain technology and for what? And how has that maybe evolved over time?
Well, firstly, I'd say, I didn't know the thing about Hyundai and Kia. I have a 17-year-old Kia Rondo, so I'm sure that it was not tracked by that. But, obviously, I'm in financial services, and I think that's the area of focus, and that's where, when you think about how things can scale, that's what we're looking at. So, the opportunities abound from moving, financial markets writ large onto blockchain. So whether that be through exchanges or ATSs, where you can transact more seamlessly, whether it be doing transactions that can happen intraday. So, one example, and something that we actually did, a little over a year ago, was we did an intraday financing trade with a client where we were able to borrow money and lend money for, a couple of hour period. We're not the only firm that's done it. JP Morgan has talked about this with I think their Onyx platform was rebranded today. Connexus, is that what it's called? I don't know. But anyway, so, and that's one of the things that we're seeing. It's like, to unlock capital in a way that we haven't been able to do before. And that's really, what we're most excited about. But of course, this is why it's really great to talk to you about this other stuff, because I sit here with blinders and think only about the financial market. So I really love hearing about all the things that you all are doing outside the financial markets.
Well, the financial market overlay exists across so many different industries, which is very exciting. You think about fast food. 4 of the top 10 fast food restaurants by revenue are utilizing Hedera and have utilized Hedera for the tracking of their perishable food. You look at examples like during COVID, the NHS out in the UK was tracking through a device the temperature of Pfizer vaccines to ensure that they work within a compliant range. There's a number of different applications, but I think it comes down to what trust problems are being solved utilizing this technology. And I like to highlight 3 really clear ones because I think they have distinct applications. The first, I would say, is a transactional trust problem, a counterparty risk. Right? That's will the trade settle? Can I trade with that other party? The second really relates to smart contract risk, the execution of logic, the procedural component. And as I mentioned earlier, since we got moved up, the timing was thrown off. So we're lucky to have Kurt from PwC to join us, albeit late, but not to his own issues here. So Kurt, if you wouldn't mind, we were just getting into it, but a quick introduction of yourself and what PwC does within your purview.
Sure. Good morning, everyone. Kurt Fields. I lead our blockchain practice at PwC. So we work with both Fortune 500s that are looking to integrate with the technology, as well as the other side of the equation, the networks and the infrastructure providers that are looking to work with larger enterprises.
And so one of the topics that we were just discussing, Kurt, was green bonds. And I was touching on some of the trust problems. So we got to the transfer or counterparty risk, smart contract, which is the execution risk, and the third risk that really is a trust problem that this technology solves relates to title, provenance, ownership, and that is the data recording. And this is where we're seeing a lot of the transactional volume from industries, and that layer provides a really powerful servicing layer, the underlying component of some of the financial applications that Thomas was just mentioning, that provides for financial products on an emissions basis greater integrity in the underlying. So, Kurt, in terms of either use cases that really excite you or industries that you're really excited about in terms of utilizing this technology, can you speak a little bit to that?
Well, I think one of the biggest shifts that we're seeing is there's finally this convergence of the traceability of information on some of the use cases you just mentioned. So whether it's emissions, other operational data, now converging with digital assets. So this is something we've all been working towards for years. And it's been, I think, dual parallel paths for a long time, but we're now seeing financial transactions finally being triggered by underlying data that is tied to contractual information. So whether we're talking supply chain, identity management, whatever it might be, the digital assets that are now flowing around enterprise operations are more real-time tied to that data. And so I think that's been a very, very big shift in the industry because it's been divergent up until now. And so we're seeing the real world financial transparency around operational performance.
And that's something that I'm really excited about. I mean, over the last several years, there's been many financial products from money market funds largely that have been tokenized in a variety of different platforms, including Hedera with the Aberdeen Fund as well as others. Thomas, what are some of the challenges and opportunities that you can share with us as it relates to blockchain solutions?
Yeah, so I think that, and actually, again, interesting to hear the perspectives from you all, coming from a different place. But one of the things that I see is the actual, the cash leg, whether it be a financial instrument or whether it be, a transaction that's related to, tracking data and things like that. And while different blockchains have different mechanisms to do that, of course, the stablecoin market is large and relatively large compared to the blockchain ecosystems. It's still nowhere near the size and scale of how money moves. At like my institution, the amount of money we move on a daily basis through the FedWire is substantial, and we're in the U.S. a relatively small medium-sized player. So I think the ability to tie the financial aspect of it from a payment standpoint and to have that automated in that process is one of the key areas of that. So I'm interested in what you guys think along those lines.
I mean, that's certainly what we're seeing in conversations with some of the larger institutions. Mondelez is a great example, maker of Oreo cookies and Ritz crackers. So they came to us and are using Hedera to go beyond the supply chain use case, but actually to engage with their customer base. So as a form of addressing coupon fraud on a global basis. And so by recording their coupons in a digital format through a blockchain, there's no double spend, there's no counterfeiting of these coupons, and they have real-time information that they didn't have before about how and where their coupons are being used within their various sale distribution angles. So it's an interesting application, and there are more and more financial layers that are being built upon these types of use cases.
So I really want to see hear the podcast about coupon fraud, the large scandal. There's got to be a good story there.
It's surprisingly large in the billions in terms of the annual cost to large organizations that relate to printing paper coupons that are out there. And I think there was a Netflix documentary that recently came out on coupon fraud, if you want to check it out. Real problem and real solution, and that's ultimately what I think this industry as a whole needs to really be focusing on, is where are those problems? What is the business use case? So maybe turning the same question over to you, Kurt, in terms of some of the challenges and the opportunities for blockchain solutions.
Well, I think what we're seeing now is, again, we're no longer in this phase of experimentation. Most companies have comfort around the technology. The hard part now is co-designing everything from renegotiated commercials to new governance, new controls that are going to transgress enterprises, because for the last 40 to 50 years with legacy enterprise technology, we've approached it through an enterprise mindset, so within the four walls of one company. So it's less about the tech now, more about the art of this redesign, this rewiring of how companies communicate data and financial assets with each other. I mean, even going back to like the example of Hedera and what they've done with Avery Dennison around traceability, that's great, but now the hard part is how do you unlock more of the potential, looking at the data you're getting from the traceability and mapping it back to financial obligations of an Avery Dennison with all of their counterparties. That's where the real business unlock starts to explode. And it's no different, I think, when we're talking about financial markets, where we think about how financial institutions need to rewire the way they do business with each other. And that's an uncomfortable motion. So I think now we're moving into this exciting but difficult phase of ecosystem redesign.
Yeah, and along those lines, I mean, I think that that's really interesting. Beyond financial markets, is the key feature of blockchain technology is network, right? And you're absolutely right that so many people have gone about doing things in silos, not getting the benefit of the network. And those are the types of things we're starting to see, really progress. The other thing, though, is the user experience. And when you think about user experience, people just think about, like, I take out my phone and I do stuff. But institutions have user experience problems also, and they're much bigger because you need to conform to, the sort of firewall restrictions and all those kind of things. And those problems I still think haven't, fully been solved. I mean, I don't know, how you guys are approaching that, but those problems haven't really fully been solved yet. Although I was talking to somebody earlier about something super exciting that hopefully I'll get to talk about in a month or so. But yeah, I think that's something that is still a challenge to be solved.
I mean, when you have a public network, the reality is anybody can build on it. But institutions certainly have different needs than that of an individual developer. And that's something that the Hedera protocol has done a lot of focus on, ensuring that there's 100% uptime. Networks can't go down because of throughput issues, and needs to be able to operate at a scale, a throughput, for a business to thrive and grow to the aspirations that it hopefully seeks to achieve. And that's where the throughput of Hedera is over 125 times that of the scaling solutions of Ethereum on an average basis over the last year, with transaction throughput of over 1,000 TPS per second historically over the last year. And so it's ensuring that the technology stack is there, but then the regulatory compliance side is there as well. Are there the right privacy concerns? Are there the embedded compliance or KYC flags that are in the protocol, which Hedera has, to ensure that there aren't concerns around violating a law or a regulation that is so critical, of course, for banking applications. But what I really love, I think, are where the industry is today, and continuing to educate both consumers, individuals, builders, and institutions on the selection of why to choose a chain, which chains, in plural, to deploy on, because I do think it's a multi-chain world and how they interoperate, and sort of the benefits and or costs related to each of these applications. So, we touched a little bit about some of the challenges. Maybe looking ahead, Thomas, would you mind sharing, when you look at blockchain technology evolving, where within the financial sector, where do you see this going?
Yeah, so I think I alluded to some of the things earlier. So one thing in particular that's something that we're starting to see coming, and again, I think there was an announcement today about both cross-border payments and remittances along with FX transactions. So there's a big opportunity to streamline that process. So when you think about the Stripe's acquisition of announced acquisition of Bridge, that's one of the drivers. It's like you have the ability to do things, tokenized, stable coins exist, they're out there. That utility hasn't really been quite achieved yet, and putting the tools in place to do that, I think, is happening. One of the other things that we're seeing is, getting to the point of network, that there are more institutions, financial institutions, I would say, but not just financial institutions, technology, blockchain providers coming together to try to solve the bigger problems. And we're definitely, seeing that, whether it be through some of the global initiatives like Agora. We're participating in the Global Layer 1 initiative sponsored by MAS. And that one in particular is not about, it goes beyond, well, here's a proof of concept and let's show the technology works. We have real problems that we want to solve. We know the technology can do it. Let's come together and solve those problems. And that's really what, where we're seeing, the changeover this year into next.
Kurt, maybe the same question as we look ahead into that crystal ball. How do you see the landscape of blockchain technology evolving?
Well, I think, I echo the sentiments, and I think the only other thing I would add is what we're also seeing and living through right now is the maturation of other emerging technologies, which inevitably is pulling through blockchain acceleration. So obviously we've been on the generative AI wave for the past 12 to 18 months, and ironically it's made blockchain look like the safer technology. Never thought I'd say that, but that plus quantum compute and some of these other technologies that enterprises are seriously investing in are going to help a lot of companies rethink the way they look at their technology stacks, and again, not just in an enterprise silo, but across multiple enterprises. And so I think that's the big game changer coming back to network effect. We're ready for that, and that's where we're going to see scaled adoption finally unlock.
Yeah, and along those lines, I think one of the things that And you mentioned speed of the types of things that you can do, but it's speed to adoption. So projects that in the past may have taken 3 or 4 years to get online are now taking 6 months or less. And that's the type of thing where when you speed up the process to get projects online. And again, this is coming from a 160-year-old institution where we have to do things methodically and under the guidance of regulators and approval and all that kind of stuff. But we are seeing that acceleration from from start to live now, and we'll see that in the next coming months, I believe.
I'm really excited about this convergence. We're seeing it across different technology stacks, but we're also seeing it across different applications of blockchain technology and or networks. And I think from the financial product perspective, fixed income and green bonds specifically present a really interesting opportunity for this ecosystem as a whole, because there is a very clear regulatory driven need. There is a lack of trust in the products due to the fact that there has been a lack of clarity on the impact. And time again, large corporations are taking significant risk in terms of making net zero claims, which they then have to either back out of or can't substantiate because there isn't the data to meet the disclosure requirements. Last September, Morgan Stanley had to back out of their net zero claims because, by quote, they lacked the data necessary to substantiate their disclosures. And so this is where blockchain technology addressing sort of these 3 different trust problems on a base servicing layer, right? We can address how, where, when certain things occurred, providing integrity in the title, the trust, the provenance of certain events, and that can be rolled up like collateral into a larger financial product that may be tokenized, possibly on Forge or other platforms. It may be in a traditional format, but just utilizing blockchain technology for the ability to have greater integrity in the underlying. And so, we're able to address the provenance risk, able to address the smart contract execution risk, and able to address the transfer of value. And when all those trust problems are solved together, that's a convergence that's very, very powerful. So maybe back to you, Kurt, in terms of, we've talked a lot about some of the solutions, but there's a human element here, of course. Who are you interacting with within these organizations, within clients? How are you seeing a shift of their mindsets?
Well, I think one of the unique things about this technology is it's not starting with the CTO or the CIO. Very rarely for us, actually. It's usually starting within the product-led teams, strategy teams who are trying to think about where the organization is going from a strategic direction standpoint. And I think that even goes back to, if I think about the future, one of the limitations that we still struggle with is blockchain is great, it is immutable, it provides transparency, we're seeing it converge with other technologies, but at the end of the day, bad data in is bad data on blockchain. And there is a human component around having a larger transformation effort where companies need to start to address the way they are utilizing their legacy systems, their legacy process, and start to redesign to better engage with technologies like blockchain. So it really is in my opinion, a top-down approach from a strategy and product standpoint around how you're going to redesign the way you serve the market and serve your customers. Because if you're starting with just the technology lens, you're missing the broader transformation play.
Yeah, I love that, and we've similarly seen the conversations migrate from what was primarily technology-driven dialogue to one that is including business and finance and other applications to really drive at why this technology should be deployed for any specific use case. And Hedera as a unique application, a protocol that denominates its fee structure in dollars at 0.0001 cent per transaction without surge pricing, enables institutions and firms to budget accordingly. And I think that's one of the powerful components of the network, to be able to say, I expect or I project the volume of my transactions will be X, and so I can budget that. And I'm not going to have uneconomic transactions because of the latest meme coin or NFT drop that congests a network. Thomas, I think we've got a last little few minutes here. In terms of your human element, how have the dialogues changed over time in terms of the people that you are interacting with and the feedback you've been getting?
Well, so I mean, I think that from a people standpoint, the internally, the interaction has grown, the understanding has grown. I think that there's been, in large institutions, there's a knowledge gap. We were fortunate to have our, the person, Slavomir Krupa, who's the CEO of SocGen Group, was supportive of this initiative from the start, and I think that's something that is a key enabler for us to be able to move this forward. But I think across the board, what I'm seeing is just whoever I speak to, I'll just say the enthusiasm about the opportunities that lay ahead of us, and the one that now I'm going to learn about is my mother-in-law double clipping coupons and scamming CVS. So I'll look into that. But
excellent. Well, I'd like to once again thank my panelists, Thomas and Kurt, for joining me here today. As I said, my goal within the HBAR Foundation is really to form partnerships with all of you, with all the individuals, developers, and businesses that are out there to really accelerate the adoption of Hedera. So I'd love to have a dialogue. Please reach out. And I hope you enjoyed the conference today. And thank you again.
thank you.
Thank you.